Hello and welcome. Over the past 10 years, private equity has just managed to outperform the JSE's all-share index. Should this be reason enough for you to invest in it over the JSE? This is Portfolio Watch and I'm Chris Bishop in for Fifi Peters. In this episode, we find out my colleague, Fifi Peters, I've just mentioned, will also reflect in the second half on which of the JSE's horror stocks are worth investing in. But first, I'm joined by Tanya van Lill, the CEO of SAVCA, the industry body, and Craig Beney, the co-CEO of Helical Capital Partners, to discuss which is the better investment, private equity or investing on the JSE. I think we can start right there. I mean, both of you just give me a brief summation of what your view is on that particular question.
Well, Chris, for us, the numbers speak for itself. Locally, we can see that private equity outperforms the listed markets. It's been so for the past few years, and we can see that it's a trend not only in South Africa, but we also see it in Europe and the US, where private equity has constantly outperformed the listed markets.
And yourself?
Yeah, Chris, so we look more at the international private markets. We follow the MSCI World Index, the total returns. And once again, over the period of 10 years, certainly the unlisted equities has outperformed listed equities. The MSCI World Index has been about 6.6% over the last 10 years. And private equity in the US and Europe have returned 14.2% and 16.3% respectively, and that's in foreign currency.
Now, the problem often with investing in unlisted companies is that, sad to say, you don't have to know exactly what they're doing. And sometimes what we've seen in recent years is some of these companies go down and take your money with it. I know you get compensated for that risk with your investment, but what is the problem with it, you think, that perhaps people aren't looking at private equity first sometimes?
I think there's a knowledge gap about what private equity is. South Africa doesn't really have a big cohort of people or investors that understand what private equity is and what the opportunities are. Internationally, private equity as an asset class is well recognized, while in South Africa, private equity is still growing. It's still a growing sector, and private equity itself, investing in private markets, is not necessarily in the public domain as you would see in the listed exchange, where you see the stock price day in and day out. Where private equity investments are directly into a private company, the fund manager makes the investments, helps this investment grow, and then realizes that investment at the end of the day. But this kind of cycle isn't always in the public domain.
And what do you think? Do you think is the problem with? Is it that private equity doesn't, shall I say, advertise itself as well as it could?
It's partly that, but it's partly also about access to the market itself. So it's been proven difficult in the past to access private equity both in South Africa and offshore. But ultimately, private equity has to be part of your asset allocation. If it's not, it means that your overall portfolio risk is slightly higher than what it should be, and the potential returns are slightly lower than what they should be. So adding private equity overall to your asset allocation decreases your overall portfolio risk and increases alpha return. From that aspect, for me, it's almost a no-brainer in that respect.
Let's say, talking about investment here and knowledge about investment, if you want to invest in the stock exchange, you can get yourself a broker, he'll advise you where to put your money, where you go. But with private equity, you've got to study companies yourself, and as I say, they're not listed, the information is not as freely available as to what they're doing. Yeah. How do you do that? How do you protect yourself?
The best way to invest into private equity is into private equity fund managers. So the fund managers raise funds from third parties, whether it be big institutional investors, high net worths, or family offices. They then make these investment decisions, and it's their expertise that choose the right companies. So part of their role is to make the right investment decisions based on what they said the investment philosophy is. So you need to ensure that whoever you partner with or whoever you invest in is an accredited private equity fund manager if you are going the private equity route.
And talking about the stock exchange, I mean, it's allegedly a safer bet than private equity, but we've seen in recent years it isn't. We've seen shares tumbling, even in the last few months, out of control in some cases, with quite conservative, well-established companies. So do you think that's a bit of a myth between the two?
I think there's two aspects. Recently, Stefan Master, who's the chairman of Partners Group, came out with governance correctness. And is the public markets or the listed markets actually not giving you the best governance, for example, that maybe private markets can give you? The reason being that ultimately is there's an agency approach in terms of listed markets, where ultimately there's always a battle between management and shareholders as to what is the best approach, and etc. And also the management tend to focus on much more short-term goals and are motivated by their bonuses and the share price. Whereas in the unlisted space is you have a much more long-term view of the market. You're also looking to people who have shareholding of at least 51% in terms of a buyout. So you can plan the strategy for the next 4 or 5 years. So I think from that aspect is there are issues within the listed space, and I think those are aspects that need to be addressed. Certainly in the unlisted space, we do believe that the governance is very high in the unlisted market. And actually last year there was more money raised in the unlisted market than in the listed market last year, which was the first time ever. So you've seen a lot more money go into the private markets, and we expect that trend to continue.
And we were talking just before the show that I put the idea maybe private equity is still, I won't say in its infancy, but under the radar a bit in this country. But do you think it's going to grow? You think more money is going to be drawn towards these unlisted companies?
If we look at some of the trends internationally, as Craig said, more money has gone into the private markets last year than in the listed space. And I think we're going to see that trend in South Africa as well. Private equity in South Africa is still relatively small in comparison to what we see in other regions of the world. However, private equity is on the growth. If we look at some of the private equity stats that's going to come out next month in our industry survey, we've actually seen that more funds have been raised last year than the year before. So there's definitely an uptake and an increase of investors looking at the private equity or the private market sector.
But the image is still very much sort of venture capital, startup companies. It's very fashionable at the moment. People don't necessarily see it as a place to put their pension, if you know what I mean.
Yes, and I think it's important to understand that even though private equity is perceived as risky, as Craig said, they invest with a mandate of really adding value and helping to grow those companies. So they can weather cyclical storms in terms of the economy, in terms of politics, because you don't have the day-to-day fluctuation of the share price. You invest it for the long term. So the private equity fund manager works together with that company on their strategy, on their operations to improve it, so that at the end of the day, the company is off better and it's made a positive impact, not only on the finances and the numbers, but also on the jobs created and the society around it.
So Craig, I'm sitting out there with, say, a couple of million. I'm looking to invest for the future. What would be your advice of someone when they're weighing up these two options, the JSE or private equity?
Yeah, I think it's once again goes back to your classic asset allocation. Ultimately you've got to have a mixture of your cash, bonds, listed equity, and a little bit of unlisted equity. It does give you alpha returns. It does decrease your portfolio risk. I think people always got to measure up their needs analysis, as always, and determine exactly what kind of risk they're willing to take and how long they're willing to tie up their money. But ultimately, I think private equity now is seen to be a very favorable place to put money. It does add to GDP, it does add to growth, and it does add to jobs. Investing into the stock market does nothing for jobs, does nothing for GDP. And so our view is, investing into a hard asset. We have underlying EBITDA, we have turnover, we have operating companies who have got a strategic view on their products. I think it's becoming a little bit more mainstream than it has before.
Obviously, you're an advocate of private equity investment, but what risks would you ask, if you're being honest with investors, to watch out for in the private equity investment space?
Yeah, I think Tanya has alluded to before, you've got to look at your fund managers who are registered, but ultimately look at the top quartile fund managers and how they've performed over a number of years. It's not good enough to look at 5 years, and even 10 years you could argue whether that's doable in terms of the track record. But certainly going from 10 to 20 years, you find a very good, strong track record. And I think that's one aspect. The other one is to dive into the investment process of the fund manager itself. How do they do things? Are they looking at buyouts? Are they looking at growth capital? Do they only take minority stakes? How do they protect themselves from potentially minority interest being eroded? So there's a lot of those aspects that needs to be taken into account, and I think the best way to do it is actually perform a mini DD with the fund manager and actually understand the mandate the fund manager is undertaking.
So Tanya, how do you think overall, give me an idea, you think, you're the industry body, of the kind of ratio of private equity investment to JSE investment? I mean, what are we looking at the moment, and how do you think that might change in the future?
Well, if I look at our membership base, they manage 180 billion rand in assets under management. So if you compare that to the size of the JSE, very small if you look at the value of the companies. However, last year they invested over 31 billion rand into the South African economy. And that shows you that there's still a lot of private companies out there that is ready for growth and ready to access new markets, access new products, create new jobs. So 31 billion rand in 1 year, and it was a tough financial year last year, is not bad at all.
And do you think that private equity firms, they should be much more aggressive in selling themselves when it comes to getting more of this investment?
I wouldn't say aggressive. I would say we need to tell the success stories more. We need to do more education, and that's part of our role as an industry body, is to help educate institutional investors in South Africa about private equity, about the risks, about what they need to look at when they invest in a fund manager, so that they do proper due diligence. So I wouldn't say aggressive at all, but maybe just share some of those success stories.
But just a closing thought from you here, Craig. I mean, isn't that one of the problems with private equity? You have these companies out there doing fantastic things maybe on a small trading estate somewhere in this country, and few people actually know what they're actually doing and what wealth they're creating.
Yeah, so I think there's a number of aspects. You get a number of different private equity firms. You get your management buyouts, so where the management have decided they can take this private company a little bit further than what it has with the original owners, etc. And you also get the family-owned businesses as well. And then you get people saying, actually, between coming that and growth capital and buyouts, I can actually deliver something that is meaningful into the market. So, they're not necessarily in the farms or in the states somewhere. For example, the sort of minimal size check we spend is about $200 to $600 million. So they're large companies.
Okay, well, thank you very much indeed for your time and your insights. And I'm sure the viewers out there will make up their own mind exactly which way they're going to go, JSE or private equity. That was Tanya van Lill, the CEO of SAVCA, and Craig Beney, the co-CEO of Helical Capital Partners. Now, next up, in the second half, my colleague Fifi Peters speaks to Wayne McCurry from FNB Wealth Investments on when to invest in so-called horror stocks, or you could just call them tainted stocks. Do stay tuned.